So I'd like to start the presentation for the quarter ending 30th June 2026. Uh, just a quick brief about NDC. So we'll talk about the company's history, a brief intro. I know we've been doing it every quarter that we've done. So what are the NDC verticals that we have? Then the overview of financial results and what are the outlook. So as you know that NDC is one of the leading FMCG companies, probably only one operating in the space of detergents, home care, and beauty business. We also have recently initiated a startup with oil and gas business, which was in 2024. So 2025 was the first year of operation, and 2026 is the second year of operation, which is the third half of the operation. So we started in 1981 manufacturing detergents basically with the brand of Bahar. Today we export to all GCC countries through either distributorship or through direct business. And also we supply to a few of the African countries, which currently we are not able to due to the war situation. It is largely the brand is built around value for money. And over the years, that has helped us win the Trusted Brand Award in Oman for over 5 times. So the company today also boasts a fully its own research and development wing, both for the oil and gas business and for the consumer products business, to keep abreast about the latest happening in the industry. We are one of the first ISO 9001 certified in the detergent industry in GCC. We also have certified with 1705 for the oil and gas business. So we've kind of quite equipped in terms of all ISO certifications, which are relevant for our businesses, both the sides of the business. So the consumer products division, just a second. So is engaged in end-to-end. So we do manufacturing, marketing, and distribution of all these products. Basically the detergents, the liquids, powders, and soaps. In aqua petrochemical division, which is the one which is for oil and gas, we cater to trading of specialty chemicals, commodity chemicals, and we are also now started manufacturing demulsifiers for Ara Petroleum, and we are in advanced stage of discussions with PDO and MBPS. Okay, looking at the first 6 months period, it's one of the most challenging period that we've had to start with the war situation ended up in increasing the material prices significantly high, and also the freight cost, which led to the gross profits coming down from 4.59 million to 3.6 million, ended up in a loss of about 279,000. And net assets as per share as on today stands at 813, which is minus 14 paisa per share as on 26, compared to 854 paisa in the first half of last year. So the entire issue stands largely due to the issue in terms of material price increase and the freight cost. So if you look at the revenue, we had a 13.2 million for the first half of the year last year. We stand at about 12.5 million. The gross profits is about 28.92% as against 34.76, largely upon material price increase. So if you look at key materials which are used for our business is LABSA, which has gone up by 40%. SLES is the other important material, which has gone up by 14%. Salt at about 16%. LAPO at 60%, sodium sulfate 50%, and all packing materials have gone up in the range of 15 to 30%. The freight cost went up by 70,000 due to higher freight. The cost is not just the import freight, which is part of the product cost, the raw material cost, but the inland freight cost, that is from Oman to Kuwait, Qatar, Bahrain, KSA also increased significantly. This has definitely impacted the gross margins of the organization. Selling and distribution expenses, if you look at it, we are maintaining at 22.51, which is less than the last year of 23.09. Administrative expenses at an absolute level is about 7% as against 6.17%. Year-on-year change is 8% is a change on administrative and general expenses. But this change in administrative and general expenses is largely due to the change in ERP cost, which has increased because we moved from the earlier LN system to Microsoft this year, so which has increased the cost of the software. Otherwise, the cost by and large remains in proportion to what it was last year. We've done only the increments for the Omani employees. The expat employees were not provided any increments due to the exigency in the system. The finance cost went up, which was also largely due to increase in material prices and the collection cycles, which are a little elongated, and shortened the payment cycles, which has impacted the finance cost. And therefore, the profit before tax remains at about minus 2.23% for the first half of the year, compared to 4.22% of the last year. So if you look at the financial position in terms of assets, we currently having a total assets of 34 million as against 34.15 in June, variance of 80,000. The current assets, the increase is basically due to the depreciation for the period is about 381, which is an addition of 231, and we had a disposal of about 21,000. The current assets mainly increased in liquid by 390, the soap factory by about 52,000, and the PDR reduced by 170,000. So due to pending credit notes, I think the collection, the receivables are higher, largely due to the pending credit notes, which we will be squaring it off within this next couple of months. The share capital remains the same. There are no major changes except the retained earnings part of it, which was the dividend that got paid out in the first half of the year. So if you look at the non-current liabilities, the lease liabilities is for the assets on the lease for which future payments will be done. Then deferred tax liability is created on the revaluation reserve. So the lease liability is about 2.3 million as against 2.2 million. The deferred tax is about 1.88 as against 1.9. End of service benefit in line with the guidelines of the government and the Ministry of Labour. So it has been provided as on date up to, it is also kept up to date. If you look at current liabilities, it is lower compared to previous year. The interest cost is maintained at 5.5%. So all bank borrowings are today at about 5.5%. Payments deferred to certain suppliers to control loans and interest costs. So it's just a management of payables and receivables to have a healthy working capital. And that's the adjustments that have been made. Looking forward for the year, we do expect the year to be more challenging than the first half. Because the first half, the first quarter was relatively okay. The second quarter was more challenging. We anticipate quarter 3 and quarter 4 to be even more challenging with respect to cost of materials, availability of materials, and ability to move materials. Because we source a lot of materials from China, India, and Europe. With both Red Sea and Hormuz being into a problem, we are currently paying 10 times more in terms of freight, which will, and also our inability to bring dangerous goods due to either marine toxin or due to flashpoint, which is also will be affecting our production. Unfortunately, companies which are based in countries like KSA, which has got local resources available, they are continuing to drop prices and put pressure on the rest of the market, which has also put pressure on our pricing ability. That could also be one of the challenges we face. One of the key things that we wanted to do this quarter was to increase prices. But unfortunately, Consumer Protection Authority is yet to approve the price increases for us, so which is already put pressure on us in July and August. I hope we will be able to get some approvals moving forward. Without the price increase approvals, it will be quite a challenging P&L moving forward for the full year. We've taken a lot of mitigation measures to look at reduction of inputs to the trade, try and see whether we can source semi-finished goods from outside India, outside Oman at a lower cost, largely from Indian suppliers. We are also looking at whether we can bring in concentrates and premixes to reduce the cost and also import relatively at a lower rate. But all these are kind of changing on a daily basis with the prices changing, being very volatile in the market. So this is adding more complexity to the ability to move forward in a more profitable direction. Thank you very much. And this is the information or presentation that I'd like to share, but any questions, I'm more than happy to take it. Okay, if no further questions, then I would like to thank all the participants who have joined. And inshallah, hope the Q3 situation improves and we are able to overcome the pressure on prices. Thank you.